Good afternoon, everyone. Thank you for joining our call today. Welcome to the PPP call this afternoon. My name is Blessy Thomas. I am the project director for the MBDA Care Center, which is operated by the Enterprise Center. Just to quickly give you an overview for the MBDA Center, the purpose of the center is to provide training, education, and advice to businesses impacted by COVID-19 and the resulting business restrictions and shutdowns, with really the goal of thinking through a recovery plan and process and the support you need to do that. Really, today's call is tailored towards sole proprietors, single member LLCs, and independent contractors who are interested in obtaining a forgivable Paycheck Protection Program loan for your small business. We will, on the call today, primarily cover three areas. First, we'll kind of walk you through the PPP loan calculation. And the reason to really kind of get into that, we'll give you some context around PPP, but really focusing on that, we want you to see the key figures that are being pulled from your tax documentation to calculate that loan amount. Second, we'll talk about the advantages of accurately reporting your income on your Schedule C or 1040 tax returns. And third is really to talk about, the challenges your business may encounter, including challenges with obtaining PPP funding as a result of underreporting, right? So we do want to cover that. And the reason why we wanted to cover this topic is when we reviewed what happened with PPP last year, there were businesses who couldn't access PPP funding or only accessed probably a lower amount than maybe what they truly could access because they understated their tax returns or they didn't have tax documentation. They weren't filing them. So these were two big challenges we noticed as a pattern, and candidly, we see it still happening as we're processing now, that we want to mitigate, and we want to help you understand why it's important, why it's critical for you to prioritize, and help you have some resources kind of to address questions you may have around that. Joining us today is John Milligan with Milligan Company. He's the managing principal of Milligan Company, the largest minority-owned consulting and CPA firm headquartered in Pennsylvania. And John will be going into the detail around the PPP program and these key topics we addressed that I said we will cover today. We also have joining us on the back end, we will spend some time the second half of the call for Q&A. So John will address those questions along with the Morgan Lewis team, specifically Scott Berman. So thank you to both of you for joining. And with that, John, I'll hand it off to you to present our content. You might be still on mute, John, so you might have to come out mute.
I apologize, I was. Hi, thank you. So I'd like to just kind of start out by sharing just some background information about the program. As most of you know, this program started almost a year ago, and they rushed the program out with very little guidance and feedback from the public. And so a lot of what we have experienced and what we're going to talk about today are regulations that have continuously evolved. And some of the regulations that are in effect today were just put in place last week. So I just wanted to kind of put that out there for you to know that this program is constantly evolving and you have to stay current because things on the forgiveness of the loans and the calculations of the loans are changing on a continuous basis. So I prepared a number of slides, and I'm not going to spend a lot of time on them because we simply don't have time today. But what I wanted to do was give you a very brief background of the PPP programs round 1 and round 2. And I think it's important to give you a little background on that because they are both applicable right now. And there's slight differences between the programs and the way you apply for them. So I wanted to talk a little bit about that. We wanted to go through the application and show you some calculations on how to calculate the maximum loan amount. And then there's something that you should be aware of is that in order to qualify to get a second round of loans, if you in fact got the first round, you have to have spent all of the money from your first loan. And so I just wanted to talk for a few minutes about forgiveness and how you go about calculating the amount of forgiveness so that you can be sure that you qualify by saying that you spent all of the first loan proceeds. And then we'll open it for questions. Okay, so moving quickly through the slides. So as we all know, the reason why we're all here is the major benefit for this program is um, borrowers are entitled to upwards of 2.5 months of payroll costs and fringe benefits. And for the second loan go arounds, if you are a business whose NAICS code starts with 72, and that would be for food services or restaurants or things of that nature, you're actually entitled up to 3.5 months of payroll costs and fringe benefits. The loans that you are to receive are provided by a commercial lender, such as the Enterprise Center. And so the way the process works is you will apply for the loan with the Enterprise Center or another borrower. That loan will be guaranteed by the SBA. And if you meet the qualifications for forgiveness, the SBA pays the bank and your loan is forgiven. The loan requires no collateral and no personal guarantees. So let's talk about round one. As we all remember, back in April, they began with several $1 billion worth of loans. And essentially all small businesses with 500 or fewer employees were eligible, including corporations, LLCs, partnerships, sole proprietorships, and certain not-for-profits. And so the concern that we've seen that we're talking about today are those sole proprietors and some partnerships. Now, there are certain businesses that were prohibited from receiving loans. If you were a business that were legal in your state, but were not legal federally, for instance, medicinal marijuana, you are not entitled to a loan. If you are a business in which 20% or more of the illegal, or I'm sorry, the businesses that did not qualify, right? And so, again, if you did not hear me, it would be businesses that are involved in illegal activities, any business in which 20% or more of the business is owned by a person who is either incarcerated or currently charged with a felony or have been convicted of certain felonies within the past 5 years, and businesses whose owners owed or controlled a business that is delinquent or defaulted on a federally guaranteed loan. And then the following, you must have been in business on February 15th of 2020 in order to be eligible for one of these loans. All right, so moving on. For round one, the maximum loan amount was $10 million, and you calculated the amount that you were allowed by taking 2.5 times the average monthly payroll. And that was calculated by taking your W-2 income for the entire year of 2019, dividing it by 12 to get your average monthly payroll, and multiplying that by 2.5. And then on top of that, you could add your employee benefits. Now, you'll see here, I list the specific benefits that are allowed. I just want to point out that in the original legislation, they did not have all of these items listed, but in the latest bill that was passed in December, they provided for all of these benefits to be allowable, and they're allowable for both the round one and the round two loans. So other things for you to consider are, if you're a seasonal business, right? If you're a landscaper, if you are involved in any business in which you work maybe just 6 months a year, there are special calculations where you take your 12 weeks of your highest activity and you calculate your average payroll based on that instead of taking the total average for the year. If you are self-employed, if you are a LLC in which you are a single member LLC, or you are a sole proprietor and you file a Schedule C, then you will use your form 1040 Schedule C, and you are allowed to take 2.5 times the average monthly amount on your Schedule C. And know this, that the amount is capped at $100,000. So if you are a person who made more than $100,000, you're limited to, in your calculation, of taking $100,000, dividing that by 12 months to get your average monthly amount, and you multiply that by 2.5, right? So here I want to go through some examples. I've got 3 examples on how to calculate the maximum amount of your loan. And this first example would be for an individual who is self-employed and they have no employees. And if they go to their Form 1040, and you'll see here that I've got from 2019 or 2020. Okay, so the new legislation that was passed in December permitted you to use either your payroll from 2020 or 2019. And that's important for you to know because many businesses were hit pretty hard in 2020, and their payroll was actually smaller in 2020 than it would have been in 2019. And so if you go and compare your 2019 payroll and your 2020 payroll, you're going to take the payroll period that gives you the highest loan amount. So in this example, the borrower had $75,000 on their Schedule C. They divided that $75,000 by 12 months and multiplied that multiplied that amount by 2.5 months. So in this situation, they would be eligible to borrow $15,625. All right. Now, one of the things I also want to point out about self-employed is you'll notice here that the self-employed is not allowed to charge fringe benefits. That's something that comes across as not being fair. I personally think it was an oversight on the part of the government, but in all of the examples that they provide, they do not permit the self-employed to charge fringe benefits. So that's something we have to live with. Okay, we can go to the next slide. So the next slide is an example of a person, you're a sole proprietor, but you have employees. And in this situation, you have to use for your own salary, you have to go to your Schedule C for your own salaries, and then you have to go to your W-2 forms for all of the salaries paid to your employees. And so in this example, the borrower on their Schedule C showed $75,000 in net income. When they went to their W-2s for all their employees, up to $100,000. Again, if an employee makes more than $100,000 in a year, you're only allowed to borrow up to $100,000 of their salary. So any amount over that, you have to cut out. So in this example, the borrower had wages for employees of $350,000, and they had fringe benefits for all of those employees of $45,000. And so their total allowable costs would be $470,000 divided by 12 months to get the average monthly cost of $39,000, and you multiply that by 2.5 months, and you'll get a total of $97,917, and that would be the maximum loan amount for that particular borrower. So let's move to the next slide. So this last example would be one is if you're a partner. You know, you've got 3 partners and your partnership issued K1s, and all of the K1s for all of the partners equal $650,000. In this case, they put a little twist in the calculation by reducing the amount slightly because they want to account for the fact that you owe self-employment taxes, right? And so you apply this factor of 92% of the K1, and in this case, the maximum partner's income that would be allowable, but subject to the $100,000 ceiling, would be $600,000. Now, assuming there's 3 partners and all 3 partners made in excess of $100,000, remember their income is capped at $100,000. So of that $600,000 in income that's on their K1s, only $300,000 of that, $100,000 for each partner, would be allowable for purposes of calculating your maximum loan amount. If they had employee wages of $350,000 and fringe benefits of $40,000, in this case, the total allowable costs would be $695,000 divided by 12 months to get their average monthly payroll times 2.5 months. And in this case, the maximum loan amount would be $144,792. Also want to point out here that if you are a partnership, partners can't use the K1s themselves and go and apply for a loan individual. If you're a partnership, the loan can only be made through the partnership as it's done in this example. Next slide. If you are an LLC, there are single member LLCs where there is just one member. They are considered disregarded entities and they filed a Schedule C. If you meet that criteria, you follow the example that I just gave for a sole proprietor. If you are a multi-member LLC and you file a partnership return, you use the example that I just gave for partnerships. Okay, so round 1, was kicked off in April, and as we know, there was a frenzy, and all that money was spent in 14 days. They ran out of money, and so Congress appropriated additional funds, and the program was extended to August the 8th of 2020. But at that time, a lot of small businesses had experienced PPP fatigue. And unfortunately, a lot of businesses did not apply for their first loan, and they actually left a lot of money in the program that was not used. Next round. So, I'm sorry. So in December of this past year, Congress passed another bill, the Economic Aid Act, and what that act did was 2 things. Essentially, it took the first loan program, so anyone who had not applied for or received a loan in the first round was now eligible to receive a loan, and they extended that deadline to March 31st. And then the second thing it did was created the second round of borrowing for those individuals who have received a loan in the first round. But in order to receive that second go round, you must have expended all of the money that you got in your first loan, and there's certain other qualifications that are more restrictive than what was applicable to round 1. So also the first round loans, there were certain changes that were applied that were different from the people who applied for those loans last year. So as I said before, the date was extended to March 31st. Uh, this time around, they were concerned that in 2020, businesses may have taken a hit in their payroll, and it wouldn't be fair to have them use their 2020 payroll for purposes of calculating the maximum loan amount. And so they said, so we're going to let you use either 2019 or 2020, whichever amount gives you the largest payroll for you calculating your maximum loan. And if you're not self-employed, if you're an employer, there is a third option in which you are permitted to look at your payroll for 1 year preceding the date on which the loan is made. So you have three options, and that's an opportunity for you to go back to maximize the amount of loan, look at all three of those options, and figure out which of those three options provides you the largest amount of the loan. All right, next slide. So, so again, eligibility requirements for round two, I've covered some of those. All of the proceeds from the first loan must have been spent on the allowable costs. So it's important for you to know that if you're going to apply for round two, and you probably have not applied for forgiveness on your first loan, you need to have at least gone through the calculations and understand that you have all of the costs incurred that you're going to need to have the entire round one loan forgiven. Secondly, the first go around, the number of employees, maximum number of employees was 500. For the second go around, they made it more restrictive. They were looking for smaller businesses. So they reduced the number of employees from 500 to 300. If you have more than 300 employees, you are not eligible for the second go around. And then the third, probably most challenging requirement is that the borrower have experienced a 25% more reduction in gross revenue when you compare your quarters between 2019 and 2020. Next slide. So the maximum loan amount is also reduced. The previous loans were 10 million. Now the loans are capped at 2. And the final change, as I said earlier, if you are a business that's involved in food service, if you're in catering, restaurant business, you will have a NAICS code that begins with 72. And if your NAICS code begins with 72, and those examples that I gave you earlier, in which you multiplied your average monthly payroll by 2.5 months, here you can apply an average of 3.5 times your average monthly payroll. Declines in gross revenues. So in order for you to qualify, you have to be able to look at all 4 of your calendar quarters. And one of those quarters, not all, not the entire year, just one quarter, you need to be able to demonstrate that your revenue, your gross revenue dropped by 25% or more. And, for some smaller businesses, they don't keep their financial statements on a quarterly basis, and that can be somewhat of a challenge. And I think with the financial institutions, they're looking for different kinds of documentation to support that. But I think it's important for you to have monthly or quarterly financial statements because the banks are going to want to see them. And you need to be able to show that your revenue in one quarter dropped 25%. There's an alternative method that's acceptable. If you completed your tax return for 2019 and you completed your tax return for 2020, which no one has, but if your 2020 tax returns show a drop of 25% for the entire year of 25% or more, then that's evidence that your revenues dropped 25% in a quarter. And so that would be evidence that the banks would accept as a drop in revenue. The gross receipts are all revenues received, including interest and all operating revenues. And it does not include the money that you receive from your previous Paycheck Protection Program loan. So you do not include that amount in your income. So documentation requirements. So for loans of $150,000 or less, documentation will not be required to be submitted with the new application. And this is something that they're trying to do to make sure that these loans, there's a lot of loans, they're trying to push them through. And so they reduced that requirement. For loans over $150,000, the documentation will be consistent with the documentation requirements for round one. And finally, if you are using 2019 payroll for purposes of calculating the maximum amount of the loan, then you're not required, and you're using the same lender, then you are not required to resubmit that documentation because the bank already has it. I wanted to point out here that when you're doing your application, there's a number of certifications that you're checking. And I know that a lot of businesses apply for a loan, they receive the loan, and they're really, if you look at their balance sheet doesn't look desperate. And so in their mind, they're saying, you know, I'm certifying that there is this economic necessity, that I need this money, and I want to make sure that I'm not checking a false certification. And so the SBA and the Treasury, they address this issue. If your loan is for $2 million or less, you can check that box and you have somewhat of a safe harbor to say that if you're less than 2 million, they're assuming that you need the money, right? So there's no guilt or concern on that. And back to forgiveness. And again, this is important because you need to have spent all of the first loan in order to qualify for the second. Requirement is that the loan proceeds to be forgivable must have been spent during the covered period. And the covered period is anywhere between 8 weeks and 24 weeks from the time that you received the loan. And that the employee compensation levels are maintained. And we'll talk a little bit about how you can be penalized if you have not maintained your employee compensations, or hopefully you will have met one of the safe harbors if you have not maintained the required payroll levels. And then finally, 60% of the proceeds need to have been spent on payroll. All right, 40% can be spent on other costs. Cost eligible for forgiveness includes payroll, and then mortgage interest, rent, and there's certain other costs. You can go to the next slide. Just trying to keep us moving here. Utilities, these operating expenditures and supplier costs are something that they've put into the most recent legislation. I think there's going to be some confusion there on exactly what these costs are and what's allowed. So if your payroll and your other costs do not cover the full amount of the loan, I think you can go back and take a closer look at costs that you spent in these areas. A change in December, in the act in December, it used to be that you had to choose either an 8 weeks or a 24-week period. The new legislation permits you to choose anywhere between 8 and 24 weeks. And I don't know why anyone would not choose the full 24 weeks. And I'll give you some examples as we move forward. Issues impacting loan forgiveness. When you're doing your calculation, if you have people who you paid $100,000 or less, and they'll compare what you paid them back in January through March to what you paid them during your covered period. And if the amount that you're paying them during during the covered period has decreased by 25% or more, they will decrease the amount of the loans that will be forgiven. The calculation also looks to the number of full-time equivalents. And if your full-time equivalents decrease, there is a formula which reduces the amount that will be forgiven. But there are certain safe harbors that are put in place that would stop you from having to experience this loan forgiveness. In this slide, I just want to just show the example of why it just makes sense to go to 24 weeks. If you're a sole proprietor and you're going to your Schedule C, and when you look at the amount that can be forgiven, if you choose an 8-week period, if let's say that your salary was $100,000 or your income was $100,000, if you choose an 8-week period, well, you get $15,000 forgiven. If you choose 16 weeks, it's 30, and if you choose 24 weeks, it's $46,000. So it's a no-brainer. You take 24 weeks. Next. And then finally, the simplified forgiveness of loans. Again, a change in the act in December provided for simplified forgiveness application for loans. And just as recently as last week, the form for forgiveness for loans just came out. And here we have a list of the information that is on that form. It's a one-pager, and these are the things that are required to be on the loan application. It's going to be real easy for you to complete that. Now, it's important for you to know that they've simplified the requirements for the documentation that you have to submit, but these loans are subject to audit. And even though you're not required to submit the documentation to the banks, you're required to keep those records on hand in case you are audited. And the records for payroll need to be maintained for 4 years, and all other records must be maintained for 3 years. And then this was a biggie. Prior to the December bill, if you got a loan, when the loan was forgiven, the loan was not taxable, but the IRS also said that the expenses that you paid were not deductible. So effectively, you were still paying taxes because you lost all those deductions. What this new tax bill did was made the cost deductible and the loan forgiveness not taxable. So, that's a real benefit to every borrower because now there's no taxes on the program. And that completes my slides.
Great. For those on the line, I do want to go back real quick to level set something before we take questions. If you notice John's calculations in these slides, if you notice the baseline documentation across the board for all of these are tax documents, right? That is the basis of where, so first emphasis is the importance of having your taxes filed, your tax documents proper, and so on. The second thing is, if you notice, I'll just use this first example. If this, let's just imagine a scenario where their true net profit was 100,000, but they only reported 75,000 on their net income line. They are basically leaving over $5,000 at the table because they didn't properly report the tax documents, over 30% differential, right? So just wanted to make sure that everybody understands the weight of why it's important to file those tax documentation, because this is not the only source of funding that requires tax docs as your verification of your income, wages, and so on. But also the importance of accurately portraying your profit, because you do miss out on opportunities for greater dollars. And especially, as John mentioned, if you trigger that 60% use to payroll and can be forgiven these dollars, that's significant cash infusion to your business that you do not have to return, right? That's a big deal in terms of cash flow leverage. So with that, we'll open it up for questions. I see that we do have some in the chat. If you have specifically questions around taxes, we will, definitely encourage you to kind of ask them and address them in the chat. So please feel free to add more questions if you have. Go ahead, Victoria.
The first question is, the slides will be sent out, so we will send them out to everyone. The next question from James is, will companies who were operating before February 2020, but converted from a partnership to an LLC?
So that shouldn't affect your calculation at all.
Next question is, what is the process for an S Corp?
An S Corp or a C Corp is pretty straightforward. It's based on W-2 wages. So in the examples where examples 2 and 3, where we showed employees, you take W-2 wages. So where you have an individual who may be charging a salary, plus they have the corporate income that's passed through, only the amount that they charged in salary in their W-2 would be allowable for the calculation.
Next question is, please stay on mute. If you do not have to have received the loan forgiveness, when should I apply for a loan forgiveness of the first round in order to apply for the second round?
Well, you don't have to actually apply for the loan forgiveness on the first round in order to qualify for the second round, but you must have spent the money. You must have met the qualifications for loan forgiveness. And so, people were being told last year, don't apply for forgiveness, because they knew that the SBA and Congress was working on simplifying the application. I think that they're probably where they're going to be as far as simplifying the application. So if you've met the requirements, you can do it now. And I think it's a good exercise to go ahead and do the calculations so that you can prove that you qualify for round 2. And if you've done those calculations, you might as well go ahead and apply for forgiveness.
Great. A website has been provided in the chat that would take you for the SBA regarding the calculations for the maximum loan amount for the business type. So that is there if anyone wanted to grab that information. If you're a multi-member LLC, but don't have employees, would you qualify?
Yes.
I have a clothing and goods company and hire a lot of freelancers and photographers, etc. How would I calculate those figures when I calculate my loan amount?
So if they are considered employees, if you're paying them wages and you're reporting them you're giving them W-2s, you would take the amount that you pay them. If they are being paid as independent contractors, then those costs do not qualify for calculating the maximum loan amount.
How would a single member LLC go about applying if there is no taxes filed yet? The business was established before February 2020, but there was only transactions completed in the business name, which was a house flip of $106,000, which was a loss and not a gain.
If you experience a loss, and you're an LLC, if you're a single member LLC, you would be filing a Schedule C. And if you're experiencing a loss, you would not be eligible to receive a loan, not based on that activity.
How do we show them that the money was spent?
So if it's under $150,000, you don't have to. You have to have the accounting records in the event that you're audited, but in the actual forgiveness form, they simplified it to the point that you're just certifying that you spent the cost on you spent the money on allowable costs.
So Rosalind, that answers your question as well. The next question is, are independent contractors 1099 filed? Can I file for the PPP?
If you are a 1099 contractor yourself, then you should be filing a Schedule C. And it's the income from your Schedule C that would be used to calculate your loan amount. So yes, the contractors themselves can apply, but the company that is paying the independent contractors cannot count that money towards payroll costs for calculating their loan amount.
John, I think that possibly answers that next question, which talks about which formula do I use as an independent contractor?
And that would be that first one where we've got the sole proprietor, where you go to your Schedule C, and you take your Schedule C income, divide it by 12, and multiply that by 2.5. Unless you're in food service, where it will be multiplied by 3.5.
For a second draw, right, John? Just to
Yeah,
clarify.
just the second draw, yes.
Yeah. So if you're in a IPS code that starts with 72, but it's your first draw, then it's only 2.5.
That's correct. Yeah.
It's 3.5, just to clarify.
I think this question might have been answered already, but as a sole proprietor, if all of my 2019 gross revenue was reinvested into the business, am I still able to file for a PPP loan, given that there are gross revenue loss?
So the use of the funds is not relevant to the calculation to determine if your revenues fell by 25%, if that's what the question is. Right. So if they're concerned about, do I qualify based on the 25% reduction in revenue criteria, it doesn't matter what you use the money for. All you're looking at is the amount of money that you received. And if 2020 was 25% less than 2019 in any quarter, then you qualify.
Are the only requirements for the bank right now is submitting the simplified application? I went to TD Bank. There were some other documents they require. Should I apply directly to the SBA?
Well, you don't apply to the SBA. It's got to go through a lender. I would defer to the Enterprise Center to maybe address that, because you guys are in fact the lender.
So, I mean, I can clarify a little bit for those on the deal. When we say proof of documentation, for those who are 150K or less in request, you don't have to show your 25% decline until the back end of the process. So that's what we mean when we say you only have to provide that documentation later. But at the time of application, we do still need a copy of your IDs, right? We need to know this is a legitimate business. So we need organization documents. We need your tax docs that backs up your loan value request, right? So those are actually required at the time of application. It's more of the uses and verifying your 25% decline. That for those who are asking for 150K or less in loan amount, they only need to show that at the back end as proof. at the time of forgiveness. But for those who are asking above 150K, we do still need that paperwork at the time of submission. So just keep that in mind, what differentiating what kind of documentation is required when. And if I missed something, Scott or Victoria, please do add.
The next question is about loan forgiveness application. You need to go back to wherever you took your loan out with for that first draw and ask them for the loan forgiveness application. I am a truck owner. Can I consider monthly truck payments as eligible expenses?
So I'm assuming you took out a loan for the truck. All right. So mortgage interest is allowable. And I think that under this new term, operating expenses is one that I'm not real clear. And I don't know if our legal counsel would have an opinion on that.
Scott?
I don't really. I don't have any experience directly in that area, so I wouldn't want to comment on it.
Okay, thank you. We'll see if we can find an answer, Brandon, and get back to you if it's something different than what we just heard. How do I get the application if we fill it out ourselves? Rosalind, I'm not sure.
I don't know if I can get my question.
Okay. Rosalind, I'm not sure what application you are referring to. Beth did put in the chat where you can get your PPP round from, if you click on that link, it'll take you to our website. Depending upon if your first draw or second draw for the loan, which determine which application you get, they are slightly different. So you have to make sure that you are selecting the right application. As a nonprofit corporation, are we eligible? And if so, which business category should we file under?
Yes, you are. If you are a 501c3, all 501c3s are eligible. In the first go round, certain not-for-profits like 501c6 were not eligible, but they changed that in this last legislation. And there is a box for not-for-profit. You just check that.
When I submitted my PPP application, and I'm assuming this might have been round draw one, I was not given an option to select 8 weeks or 24 weeks. So how do we indicate that the person would like 24 weeks of coverage of the PPP application?
So that's really relevant on the forgiveness application. Right, and it was something that was changed with the new bill in December. So when you go to do your forgiveness, that's where that calculation becomes relevant.
Brandon, the answer to your question is no. It says, can I file for round two if I did not apply for round one? You have to go in and apply for round one. Round one will be more beneficial for you than round two. Round two is a reduction in employees and in showing that 25% reduction in over, John went through a number of scenarios, but for you, you might just want to go ahead and apply for round one, use your 2019, depending which one is higher, 2019 or 2020 on the payroll, and that'll be the best calculation for you.
Yeah.
Don, I actually had a question I received from someone. What if someone had employees, they got a PPP loan in 2019, and then in 2020, they couldn't afford to keep their employees on anymore? Or like after whatever point that they got their loan, like they kept them on for a few months and then they just ran out of money. So they no longer had employees after like Q3 or whatever. Are they still eligible?
So this goes to the forgiveness, and when you calculate your forgiveness, you look at the amount that was actually paid, and then there is a calculation to determine the number of full-time equivalents at the end of the period compared to back in, I think it was April. And if it fell, then there's a formula to reduce the amount that they forgive.
Okay.
but there are safe harbors.
But what if
that
they want to
says,
apply for round two? I guess that was my question.
where do they apply for round two?
So, I mean, are they still eligible to, even if they don't have employees anymore?
So you have no payroll costs to.
I guess,
count-
are they like the owners paying themselves or whatever? You know what I mean? Or do they then become like they're applying as a?
So what they would have to do, they would have to do a pro forma. They would have
Okay.
they would have to do a pro forma tax return for 2020
Okay.
to show what their income was. Actually, I need to qualify that because I'm not sure. Because they could still use 2019 or 2020.
Yeah, that's what I thought. That's why I
Yeah,
didn't know
the-
the answer to give them either.
So the trick here is there's one set of rules for calculating the maximum amount of loans, and there's completely different rules that they apply to tell you how much of those loans you can keep.
Well, and I think that's the thing. I don't think they'd want to claim that maximum because they're not going to be able to prove that they were paying all those people and then they'd owe that all back at the time of forgiveness, right?
Well, I figure it's better to have and no need. I figure it's better to calculate as much as you can get.
Okay.
And then in the end, if you don't have the expenses, you give the money back.
Oh, they can give it back.
Better to- Yeah, I think it's better to do it that way than to leave money on the table. To underestimate the amount of the maximum loan, and then you come to the end of the period and you've got more expenses than you need to pay the loan off.
Thank you.
I want to clarify a question that I just got. A person was declined in round one with PPP, and they wanted to know if they could apply for round two.
It depends on why they were declined.
That's what I said.
Yeah. I mean, if the same condition existed, because they didn't change that much, the requirements. So if they didn't qualify for round one, the odds are they don't qualify for round two unless they made certain changes.
Right. Or either they calculated wrong and whoever they applied with just declined them on, it got rejected out of the SBA system that way. So that's why I said it just depends on why you got declined. If they told you why you got declined.
Yeah. Yeah, you're right. If the documentation was inadequate and you were declined for that reason, you can fix that.
Yeah, they said they declined them for low income, but as long as they made a profit, long as it wasn't a negative, you should have still received the PPP. So I would probably reapply. You just got denied maybe because that particular bank didn't want to process it because the amount was so small.
So Victoria, why don't we have the person sign up for our virtual office hours to get some one-on-one?
Okay.
It looks like we got another question. Can you clarify on the tax return pro forma and how people do that?
So by clarify, so we still have the self-employed example up on the screen, right?
Yes. I think, John, they might be just asking in terms of a process, how do you come up with the pro forma 2020 draft?
Yeah, so it's interesting because, the IRS has said that they're not going to be ready to process tax returns until February 12th. So I don't know that all the actual forms have been processed yet. And the thing about this program is it's moving so quickly that all of the parts aren't in place. I would take the 2019. If we don't have the 2020 tax form, I would take 2019 for the bank's purpose, and I would talk to the bank. I would say, I'm going to do this pro forma for 2020. All I have is this form for 2019, and you go through the calculation as though it was a 2020 return.
And you should be able to work with your accountant to draft a 2020 1040.
Yeah.
Okay. Other questions? Do we have? For those of you on the chat, if you want to take a look at the chat, Beth is putting links to our portal. She has also put in links to some other information, so you might find that valuable. I'd recommend you click on the link, save it as a bookmark so you can reference it later. Do we have any other?
Excuse me, yes, I do have a question.
Go for it.
You could put that question in the chat. This person apologized for jumping on the call late. I would need profit and loss for January through April of 2019 and January through April of 2020. In my last loan, I was not included because I did own a drawer. I was only able to use my employees. Is this how this loan? So I'm saying, I guess they're trying to figure out, is that how this loan is being calculated?
Yeah, so there's two places where you can document allowable costs. Is one, either your W-2s from your employees or your 941, your payroll records, or your Schedule C. So for your employees, you would go to your payroll records. For you personally, if you are not showing a profit on your tax return on your Schedule C, then you can't take an amount for yourself. Unless you are like an S Corp or someone where your salaries are actually included in payroll in the company.
And for that last person, you need to make sure you had applied for draw 1. That's why you would need that comparison for draw 2. What happens if you're self-employed and had income on your W-2? Can you include your W-2 income for income?
No. So you got a W-2 from an employer. I'm assuming that they had a W-2 and they had a business. If the W-2 is from an employer or a company that you work for, it's the employer that can get the loan, not you. If you have an S corporation and you charge your own payroll and you have a W-2 from your own corporation, then your S corp can get the loan based on that income, that W-2 income.
Does this loan pop up on my credit score?
I don't know. I couldn't answer that one.
I think they were asking if it relies on your credit score, and I said no, there isn't a credit check to get it.
Yeah, no, it's
Right.
yeah, it's no credit check, no collateral, no guarantee. It's free money, and it's money that all of our businesses should certainly be aggressive about pursuing.
So if the loan is not forgiven and it truly is a loan, then it would follow standard processes, right, of any given loan out there. So it's really a question of, does this transition to a forgivable loan, or does it stay as a traditional loan? So that really depends on the forgiveness categories and so on. Just keep that in mind. I think there's a question about getting a one-on-one meeting. Beth put in a link for our virtual office hours. I would recommend that you sign up there for some one-on-one support. Do you see any other questions, Victoria?
There are no other questions. We answered everything that was there. Last question. I was employed with another company up until March of 2020 and received a steady paycheck, but still did not work with my own company. Am I still eligible for a PPP loan?
Oh, Victoria said he still did work with his own company, not did not, just to specify.
Oh, okay.
Well, Brandon, were you collecting, were you working with your own company and filing invoices and everything else in January and February of 2020? Because you had to be in operation prior to February 15th. Okay, so if you did, yes, I think you're still eligible.
Assuming there's taxable income on a Schedule C.
Great. Great. Okay. Sorry, I'm reading the answers here from Brandon for the rest of the team. Okay. I think we have covered all the questions for now. Again, I'm going to wrap up. This is going to feel like being a dead horse, but I'm just going to let you know why. Again, going to emphasize the importance of having tax docs and proper documentation and having it as accurate as possible. And if you're asking why not, you know, let's say you're looking, you're realizing, okay, maybe right now you're not eligible to apply for PPP because you don't have tax docs, or maybe it's not represented correctly. Why should you prioritize this right now, right? A couple of reasons. One is just to let you know, we, as John mentioned, we are processing PPP loans and we are still seeing challenges with those who don't have proper documentation. The second is, if you've heard kind of the discussions in terms of administration, there's talks of other stimulus packages down the line. Obviously, we'll have to see whether they're approved and so on. But the reality is there could be potential opportunities for further funding in the future that you want to make sure you're prepared for now, even if for some reason you cannot get into this PPP window at this present time. So please don't delay trying to get your tax documents in place, making sure it's accurately portrayed and so on. This is the time to address it. And so please do take it as a takeaway to prioritize for your business, for yourself, and for the sustainability and kind of continued growth of your business, okay? And if you have questions around that, need support around that, don't hesitate to reach out. Sign up for our virtual office hours, talk to us, and we'll try to help you as best as we can. With that, if there's no other questions, I want to thank John.
Provide the number, please.
You can sign up for our virtual office hours through the link that's been provided in the chat. So please make sure you're clicking on the links in the chat.
Thank you.
Thank you, John, so much for joining us and presenting content today. We really appreciate it. Thank you, Scott, for being willing to field questions, and to the TEC team. And I appreciate all the participants who joined us today. I hope this was helpful, and we will be sharing the information as follow-up, so look out for that. Thanks, everyone. Have a great day.
Thank you. Bye-bye.